Welcome to Paritranaya. So this is day 5, right? Okay. So in the previous class we discussed about a few of the previous year question papers from 2025 and few questions from 2024, I guess. Okay, 24. So based on that, what I've done, I compiled some questions. So probably I'll be giving a test as well in another 2 or 3 days when we cover significant amount of syllabus and question. So this list I will be sharing it with you. Okay, in the application I will be sharing just few of the questions, means the topics which are confusing. Okay, so 1 or 2 we shall discuss, we shall revise, and then we shall go to the next year questions. Okay, next year questions. So later on, if you can go through this list, and if there are any confusing options and all, you can come across. Okay, you can we can have a discussion in the next class. So yesterday we discussed about this fiscal deficit, revenue deficit, and a few of you have confusion regarding that. So I have compiled few questions. So we shall directly jump to that part. Okay. Okay. So just go through these questions. Can you just quickly reply with the answer one by one? Okay, if you have understood the concept, it's very easy. Okay, so just so all of you just solve this problem and just let me know the answer. Suppose the revenue expenditure of the government is 1,20,000 rupees. 1,20,000 crores, and the revenue receipts are 1 lakh crores. The government also reports interest payment of 15,000 crores and total borrowings of 30,000 crores. Okay. So whether statement 1 is right? Yes or no? Yes. Next, second one, fiscal deficit is 30,000 crore. Primary deficit is 15,000 crore. Okay. So what is the formula for primary deficit? Fiscal deficit minus interest payment. Here, what is the fiscal deficit? 30,000 crore. Next, what is the interest payment? 15,000. Okay. So similarly, so almost all those questions are same. Next, just here also you cross verify. 1 is correct. Correct. Next, primary deficit. Correct. Third one is also correct. Okay. Correct? Okay. Okay. Now, suppose the government has the following budgetary figures: revenue expenditure 1,80,000, revenue receipts 1,50,000, capital expenditure, net debt, capital receipts, interest payments. So what is the revenue deficit? 30,000 crore. Okay. So what is the fiscal deficit now? What is the fiscal deficit? You've just ignore these values. Just based on this, you itself calculate what is the fiscal deficit. Because if you are able to solve this, then it means you have properly understood the concept. Then similar kind of questions we can answer very confidently. Yes? 1,20,000 fiscal deficit. So how do you calculate fiscal deficit here? Total expenditure minus, what is the total expenditure here in this example? Yes, 1,80,000 plus 70,000. So 2 point, okay, so 2,50,000 is the total expenditure. Minus what you will do? Revenue expenditure. What is the revenue? So revenue receipt? 1,50,000. Next, non-debt capital receipts. So 20,000. So what is the figure? 1,70,000, right? So 2,50,000 minus 1,70,000. What should be the figure? 80,000. So whether it is right? Okay. Next, primary deficit is fiscal deficit minus interest payment. 80,000 minus 25,000. So it is 55,000 rupees. 55,000 crore rupees. Correct? Okay. Now I will not show you the answer itself. Just calculate the same fiscal deficit. Don't try to calculate orally. Okay, you have book and pen. Okay, you just invest some effort, because in the examination hall you will not be calculating orally. You will be writing some figures. Do that exercise. Even those who are joined in online mode also can participate. There is no restriction. Yes. What's the fiscal deficit? Yes. 30,000. All of you are getting same figures. 30,000. So what did you do? You added which two values? Okay. Revenue expenditure plus capital expenditure. So total is 2,55,000. Okay. Next, what is the expenditure? So receipt 2 lakh plus. Okay. So it is totally 2,25,000. So when you subtract, it is what? 30,000. Right. Next, revenue deficit is very easily. What is the revenue deficit here in this example? 5,000. So what is the primary deficit? Minus interest payment. So what is the interest payment? Sorry, what is the primary deficit? Yes, 10,000. Same. So now it indicates that you understood the concept. Okay. Similarly, what I have done for every the different topics which we have discussed in the previous class. So I have compiled similar kind of questions. Okay, similar kind of questions. So I will be sharing it in the application. You just go through all the questions. Okay. It will be kind of revision. And if you have any kind of doubts with respect to any of the questions, okay. So those questions we shall have a discussion in the next class. Okay. Next class. Okay. So yesterday there was a doubt, right? So whether gold is considered as a financial instrument. So gold, okay, by default gold is not considered as a financial instrument, but gold based derivatives, okay, so they are considered as what? Financial instruments. For example, government will create some kind of gold based bonds, so they are called as what? Financial instruments. But the plain gold or gold related ornaments and jewelry, they are not considered as financial instruments. Okay, financial instruments. Again, based on that also I have framed, I compiled few questions. You can go through those questions, and if you have any doubt, again we can have a discussion in the next class. Next class. So which was the question number that we discussed? The last question, I think. Okay, so you are supposed to begin with this, right? So in the previous class, We discussed almost all the questions of 2025 and few questions of 2024. So wherever where we had paused, from there we shall begin. Okay. So this is the next question with reference to rules imposed by the Reserve Bank of India while treating foreign banks. Consider the following statements. Okay. So there is no minimum capital requirement for wholly owned banking subsidiaries in India. Okay. Wholly owned banking subsidiaries in India. So in this context, okay. So what all things we are supposed to prepare? So first we need to know what is a subsidiary, right? What is a subsidiary? So when do we call the other company as a subsidiary? So here we come across two entities. One is parent company, another one is subsidiary. So the parent company should hold what stake in this what the child company or subsidiary to call it a subsidiary? More than 50%. Okay, more than 50%. So that understanding of subsidiary is important here. Next, once you understand subsidiary, what is wholly owned subsidiary? So I am not speaking about banking subsidiary. I am just speaking about subsidiary and wholly owned subsidiary. So when do we call it as wholly owned subsidiary? When 100% stake is owned by the parent company. Okay. Now similarly in the banking sector also, okay, we have Indian banks, we have foreign banks as well. So in this context I have prepared content. So when banks operate in India, they operate in different forms. One is foreign banks, they will start a branch in India. Another one is foreign banks will start a subsidiary in India. So in the notes and also in the classes we have discussed in detail. So what is the difference between the foreign bank starting a branch in India and a foreign bank starting a subsidiary in India? Okay, starting a subsidiary in India. So if you are unable to connect, I will urge you to go back to those classes and go through the content as well. Okay, content as well. So there is no minimum capital requirement for the wholly owned banking subsidiaries in India. So when a foreign bank, it wants to start a completely wholly owned subsidiary in India. So there is no minimum capital requirement is the statement. Okay. So whether it's true or false. So whenever foreigners, they want to start something in India, there will be a minimum capital requirement. Okay. So definitely this will be false. What is the exact value? Okay. That exact value actually is not important from exam point of view. But just generically, even if we are not read the content also, based on this statement, we should be able to conclude that whenever a foreigner, when they want to start something in India, there will be a minimum capital requirement. Okay. So without minimum capital requirement, it cannot be allowed. So first one is false. Okay. For wholly owned banking subsidiaries in India, at least 50% of the board members should be Indian nationals. Okay, Indian nationals. So here, with respect to this second option, recently some changes have taken place. Okay. So what are those changes? You have to go through those changes. Okay. So previous year when what was the answer for this question? It's 2024 question. It was dropped. It was dropped. Answer itself was dropped. Okay. But here, when you look at the previous year content, so in the RBI rules and regulations, they say that Indian nationals residing in India, it means more than 50%, at least 50% of the board members should be Indian nationals residing in India. So this was the condition. So based on that condition, we will conclude that this statement is false. Okay, this statement is false. But recently again they have brought some changes. Okay, so what are those changes? So we shall try to find out what more information about the same. So now, by referring to different sources, I got to know that now it is just Indian nationals, not Indian nationals residing in India. So this information we shall cross verify, we shall confirm once again. What is the information? Whether 50% of the board members should be Indian nationals or Indian nationals residing in India. Okay, because Indian nationals, whether all the Indian nationals are residing in India, there are NRIs as well. Okay, so now as per the previous definition, so if an NRI was part of these 50% board members, then that was not allowed. So they should be resident of India. So this question, so will not give a conclusion. We shall update the content. Okay, we shall update the content. I am just giving you an idea. Now similarly here, when it comes to banking, what are the various different angles from which we can think? Okay, so one important entity is banking. Now apart from this, what we can do is, we can find out what is FDI allowed in bank. See, in order to start a subsidiary, whether FDI is required? Yes. So to start a wholly owned subsidiary, what is the percentage of FDI? What should be the percentage of FDI allowed? See, to start a wholly owned subsidiary, what should be the FDI percentage allowed? 10%, 20%, 50% or 100%? Only if it is 100%, then it can be a wholly owned subsidiary. So this should give you an idea that in banking sector, what is the FDI percentage allowed? Okay, what is the FDI percentage allowed? So whether it is 100%, yes. Okay. Now already we know the definition of FDI. Okay. So again, in this case, I will not urge you to go through the FDI definition now. Okay. If you simultaneously want to cover, you can cover. So FDI. So when do we consider investment in India as a FDI? About 10% in listed companies. So in unlisted companies, there can be no FDI.
No, sir. No, sir.
In unlisted companies also there can be FDI, but there is no such restriction. Okay, any amount which comes into unlisted company will be qualified to be called as a foreign direct investment. Okay, foreign direct investment. But in listed companies, only if it is more than 10% stake, then we call it as FDI. Okay, FDI. Now here in the banking sector, whether 100% FDI is allowed? Yes. Okay. So similar to banking, what we will do, we will not search for all the sectors, at least based on this question. Now the recent sectors which were in news, for example, insurance sector. So in insurance sector, okay, what we'll check? What is the FDI allowed? What is the FDI allowed? Next, when you are checking for FDI, also you will check, see in case of FDI, there are two routes. One is government approval route, another one is automatic route. So what you will search here is, in case of FDI in banking, whether it is 100% automatic route or some percentage, X percentage is automatic and Y percentage is government approved route. We will search it out of curiosity. Okay. Similarly, in case of insurance sector. Okay, insurance sector, what we will do, we will check whether what is FDI allowed and whether it is automatic route or government route. Now, when you are done for banking sector and insurance sector, okay, which are the other sectors that you can do similar exercise? You can focus on, see, only when it comes to financial sectors, we will not focus on other sector. We will focus on insurance. Sorry, insurance is over. We will focus on pension. Okay, we will focus on pension. Now, we will stop here itself. We will not do the exercise for all the different financial sectors. Okay, so we will do for banking, we will do for insurance, we will do for maximum pension, not more than that. Okay, not more than that. So again, similarly for the second option, what is there? So when a foreigner starts the insurance company in India, is there restriction like the 50% of the board members should be Indians, like such kind of restrictions? See, why we are doing this exercise is because we are not gone through the current affairs. If you have gone through the current affairs, then any sector which is in news, then probably you could have added that content. But as you have not gone through the current affairs, at least the static base itself, by using the static questions itself, the current affairs part, whatever potential questions that may appear, so we will be covering here itself. Okay, we will be covering here itself. Okay, so taking this question as a base, what we will do, we will prepare for banking, we will prepare for insurance, and we will prepare for pension. Okay, and we will not add many points, just hardly 2 to 3 points. What is the FDI allowed? Automatic route or government approval route? Okay, and whether 50% such requirement exists or not. Okay, exists or not. Banking, insurance and pension. Okay, again, if time permits, you can go for other sectors as well, but for time being, I'll urge you only to focus on these two sectors. Okay, these two sectors. Now recently, see, there was in the news the example related to nuclear energy as well, but here we'll not mix up. Okay, here we'll not mix up. Again, it will lead to what confusions, and also it will become very complex. We'll focus only on the financial sectors. Okay, we'll focus only on the financial sectors. Okay, so previously this question was dropped, answer was dropped. Okay. Okay. Next, with reference to corporate social responsibility rules in India, consider the following statements. Okay, consider the following statements. So, CSR, corporate social responsibility rules specify that the expenditures that benefit the company directly or its employees will not be considered as CSR activities. CSR rules do not specify minimum spending on CSR activities. Okay. So this question can be considered as part of what current affairs, but the detail related to corporate social responsibility. So this act was as part of the act, these rules were made in 2013 itself. From 2014 onwards, repeatedly it appeared in the newspaper, but the question has been asked in 2024. Okay, so what we will do is we will consider this part as a static part itself. So corporate social responsibility. What is corporate social responsibility? Okay, the corporate, whatever the corporate companies are there, whether it is, okay, can you give an example of a corporate company? TCS. So now this CSR rules, whether they apply only to the private corporate companies or also public corporate companies?
Both.
Okay. So can these corporate companies also exist in public sector as well? Yes, they can exist in public sector as well. So it applies to both of them. Okay, it applies to both of them. So CSR, so some amount you have to spend on social related developmental activities. So what is that amount? So here in the newspaper repeatedly it appears. Okay, so does not specify, is there, right? So this is wrong. This is wrong. It specifies that 2%. Okay, 2% of the what? Total last 3 years. Okay, 2% of the profit of the last average of the last 3 years. Okay, last years. Again, generally they will not focus on the absolute value, but they have specified, do not specify minimum spending on CSR activities. It is false. It will specify. So second one is false. Next, CSR rules specify that expenditures that benefit the company directly or its employees will not be considered as CSR activities. Okay, so even if you do not have an idea of complete corporate social responsibility also, still you will be able to come to a conclusion that the first statement is correct. Now corporate, it is doing some social activities and those social activities are benefiting the company directly or its employees, then it cannot be called as a corporate social responsibility. Okay, so hence statement 1 is right. Now out of curiosity, what you can do here is, okay, under CSR, which are the activities that can be carried out? Okay, with CSR funds, what are the activities that can be carried out? So can we construct a school in a rural area? Yes. Okay, similar fashion, can we construct toilet in the rural area? Yes. Again, you will not make an exhaustive list. Just go through the list once, you will understand what are the various activities that are permitted under CSR. Okay, under CSR. Because the government, the companies, so they have to report to the government saying that we have spent so and so amount on what? Social activities, and which are the social activities and how much amount we have spent. Okay, we have spent. So again, detailed information not important. At the superficial level, that information would be sufficient. So now CSR related, we are not going to prepare any other extra information. Whatever is present here, the same things we will retain. Okay, so employer or company directly benefit, such what expenditure will not be considered as CSR, and there is a minimum expenditure, that is 2%. Okay, 2%. Okay, so now this question is a bit tricky. So consider the following statements. If the United States of America were to default on its debt, holders of US Treasury bonds will not be able to exercise their claims to receive payment. The USA government debt is not backed by any hard assets, but only by the faith of the government. Okay. Now this question, just they inserted the term called as USA. But if you remove USA and if you insert there Japan or Russia or Europe or any country, if you insert there, the answer is going to remain the same. Okay, including India. Okay, including India. So if you have understood the concept related to India, okay, the same applies to other countries as well. Okay, other countries as well. So what do they say? Were to default on its debt. Okay, on its debt. Holders of US Treasury bonds. Okay, US Treasury bonds. So in India also we have Treasury bonds kind of things. So what we have here? We call them as Treasury bills. Okay, so we know about treasury bills. So treasury bills are instruments of capital market or money market? Money market. So treasury bills are used to raise funds for a period of less than 1 year. See here, the questions related to treasury bill in different format, they have appeared repeatedly. Okay, so treasury bills, what kind of bonds they are? Whether they are zero coupon or coupon paying? Zero coupon bonds. Okay, zero coupon bonds. So we already know what are zero coupon bonds and all. Now treasury bills, who can purchase treasury bills?
Government.
No, government will not purchase.
Central government, state government.
See, who all can purchase treasury bills? So government will raise the funds by creating treasury bills. It will sell the treasury bills. Now, who can purchase treasury bills? Whether a bank can purchase a treasury bill, whether insurance company can purchase a treasury bill, can a corporate company like TCS and Infosys purchase a treasury bill? Can an individual like us can we purchase a treasury bill? Yes, in 2021 directly that facility was given to us. Now we can purchase treasury bills. Okay, so when we purchase treasury bills, we'll give money to the government, and government will give you give us a piece of paper in electronic form, so that will be called as treasury bill. Okay, treasury bill. So on the top of it something will be written, means after so and so days you will get back the money and you will give us the treasury bill. Okay, so some profit and all is involved. Now after some days, whatever the period was promised, after 100 days or after 91 days, so now you will return the treasury bill, but the government will not give you back the money. Now what happens? Can you file a case against the government in the court of law? Okay. Now see, when you take a loan from the bank, there is something which has been pledged. You will pledge your what property or some jewelry and all you will pledge. So if you are unable to repay the loan, what happens? The government will seize your assets. Okay, the bank will seize your assets. So similarly here, can you go and seize the assets of the government if the government fails to repay the amount of the treasury bill? No. Okay. So if the United States of America, I will remove the United States, I will insert India. If India were to default on its debt, so holders of Indian treasury bills will not be able to exercise their claims to receive payment. Okay, we cannot go and file a case. Okay, why we cannot file a case? The second one, the Indian government debt is not backed by any hard asset. Okay, so while selling the treasury bills, they will not say that we have so much of gold. So if you do not get your money, then we will give some part of the gold. So, okay, it is not backed by any hard asset, but only by the faith of the government. Do we have the faith in the government? Why? Because there is a consolidated fund of India. Okay, there is so much of tax. It collects what? Goods and services tax. It collects income tax. So we are very much sure that government will repay the money. So the faith on the government is built because of the amount of taxes which it collects in various ways. Okay, so hence when we invest in the government treasury bills, it is not backed by any hard asset, but it is based on what? Faith of the government. So it is not only in case of India, but any other government you take into account, whether it is USA government, Japan government, Russian government. So for all the governments, it is same. Okay, it is same. So what will be the answer for this? Both are correct, and whether 2 is the correct explanation for 1? Yes. Okay. Now you are ready. Any government, whether they replace USA by any other country, it will be correct. Okay, it will be correct. Now see, instead of treasury bonds, if they insert there what? Government securities or dated government securities. What are dated government securities? Whether they are money market instruments? Dated government securities, they are not money market instruments, because dated securities are for a period of more than 1 year. Okay, they can come under what? Bond market, but bonds are issued by whom? Government. Okay, government. So treasury bill is a what? Instrument of money market, right? Which are the similar instruments of money market? Repos, commercial paper, certificates of deposit, cash management bills. Okay, collateral borrowing and lending obligations. So in this context, whatever we have discussed in the previous class, whatever we have revised, again the same content we will revise and we will become perfect. Okay, we will become perfect. Again in this context, we will revise treasury bills. So they are zero coupon. So which are the other money market instruments which are zero coupon? Cash management bills. Okay, what is the difference between cash management bill and treasury bill? Less than 91 days. So these are the various things, the same things. Repeatedly you will revise, you will become perfect. Okay, you will become perfect. That's it. Okay. So that's what, the answer is not important. Immediately we will get the answer. But what we are interested here is, we are interested in building the approach. Because if a similar kind of question appears in the next year, okay, so we should be ready. Okay, we should be ready. So yesterday, many of you had a complaint that the notes of what economics is very bulky. Okay. So why it has become bulky? Because in 2024, whatever I had compiled, and 2024, whatever new compilations I have made, so I have consolidated them. And I wanted to remove the duplicates. There are many duplicate entries. Means the same concept has been discussed multiple times. But when it comes to consolidation, I did not find sufficient time. And I wanted to give you a print as well. So I thought that if I sit in the consolidation exercise, then it will become too late. So hence what I did is, even though there may be repetitions, okay, so I took a print and I have given it to you. So while going through the content, okay, don't get confused and don't get disheartened that the content is too heavy. So what you are going to do is, based on this discussion, whatever is required, only that content you are going to refer in the material. Okay, you will not go through each and every line, but no doubt you will be having that feeling, that left out feeling. So I am leaving many topics. You just don't have such kind of feeling, at least in these 3 months, because economics is not the only subject which you are going to cover. You are not going to become an expert in economics. So tomorrow when you become a secretary of Ministry of Finance, at that time you can become an expert. But now you are a generalist. Okay, you want to cover every subject. So keeping those what reality, okay, what the facts into account. So whatever is required from the exam point of view, in that fashion we should prepare. Okay, we should prepare. Okay. So repeatedly there has been a question on what? Digital rupee, right? Digital rupee. So it's a sovereign currency issued by the Reserve Bank of India in alignment with its monetary policy. See, some things will not get perfect idea. Okay. Now, if you look at the option, it appears as a liability on the RBI's balance sheet. It is insured against inflation by its very design. It is freely convertible against commercial bank money and cash. Okay, money and cash. So digital rupee, at least if you have a basic idea, what is digital rupee? The physical currency which we keep in our pocket, rather than keeping it in a physical mode, we are going to keep it in electronic mode. Okay, that is called as digital currency. Okay, digital currency. Now, whatever the balances you have in your bank account, can it be called as a digital currency? No. Okay, it is called as fiat currency, but just in digital form. Okay, that is not called as digital currency. Now, using digital currency, what you can do is, okay, in the forthcoming days. So now, how you exchange physical money? Similarly, we will be having application where we will be transferring digital rupee itself. Okay, digital rupee itself. Now, here we will not be able to connect completely because we have not yet started using it. Now, before the idea of UPI came into force, if someone said that we can transfer money, then it would be difficult for us to comprehend. Similarly, now it will be difficult for us to comprehend completely. But using digital rupee, rather than using the physical wallet, so there will be some wallet where money transfer will take place. Okay, money transfer will take place. Probably it can happen in the absence of internet as well. Okay, in the absence of internet as well. Okay. Now, some important things which will help us to eliminate. Now, digital rupee, see here, look at the fourth option. It is freely convertible against commercial bank money and cash. Okay, so if this feature is not allowed, then no one will switch to digital rupee. So easily convertibility should be there. Okay, digital rupee should be converted into cash, cash into digital rupee. So this convertibility is easily available. So fourth option should be part of the answer. Okay, fourth should be what? Part of the answer. Okay, part of the answer. The next, which one we can eliminate? Okay, it is insured against inflation by its very design. So nothing is insured against inflation. Okay, there are some things, for example, inflation indexed bonds and all. So they are what? Insured against inflation. But here it's a rupee, so rupee cannot be insured against. So see, now what is this digital rupee? Rather than keeping it in your pocket, you are just going to keep it in digital form in application. Okay, so if you keep the 10 rupee note in your pocket for 2 years, now will it become 15 rupees? It will remain same 10 rupees. So next year, if a chocolate which costs 10 rupees, now if it is costing 20 rupees, so will you be able to afford? No, because it is not what protected against inflation. So similarly here, it is insured against inflation by its very design. The statement is false. It means 3 has to be eliminated. So you'll eliminate 3. Okay, you'll eliminate 3. Okay, so 4 should be part of the answer. 3 you eliminated, but still you have choices. Next, it appears as a liability on the RBI's balance sheet. Okay, so this is very important. Now, whether it appears as a liability,
Yes.
very important. Now, in the previous class also we discussed RBI's what? Sources of income and expenditure. See, somewhere these topics can be connected here. The same what theme has repeated. Okay, theme has repeated. So, printing of currency and distribution of currency is considered as a source of income or expenditure? Expenditure. Similarly, the issuing of this digital rupee, it is considered as a liability on the RBI's balance sheet. Okay, RBI's balance sheet. So 2 should be part of the answer. But again, we have 2 options. Okay, we have 2 options. Now it is sovereign currency. Whether it's an Indian currency, yes. Issued by the Reserve Bank of India, yes. Now confusing part will be in alignment with its monetary policy. So it will cause confusion. Okay. Now don't get confused much. You just memorize this content. Yes, it is aligned with the monetary policy. That's it. Okay. If you unnecessarily go into detailed aspects, you will get confused. So here answer is 1, 2 and 4. Okay, 1, 2 and 4. Now it comes to monetary policy. Again, you will revise the things. So which are the instruments of monetary policy? Repo rate, reverse repo rate, CAR, CRR, SLR, yes, liquidity adjustment facility, marginal standing facility, standing deposit facility, corridor, bank rate. Okay, so all these are monetary policy instruments. Now, sorry, not monetary policy, monetary policy itself. Now, apart from this, again, some other things related to monetary policy means every time you come across monetary policy, this revision should take place. So, monetary policy committee consists of how many members? 6 members, including chairman, excluding chairman? Including chairman. When do we call that the monetary policy has failed? When for 3 consecutive quarters they are not able to maintain the range of inflation. What is the ideal range of inflation? 4 plus or minus 2%. Okay, so all these things you should be able to revise. Now when it comes to deeper aspect, to what extent we have to go? So what happens when we increase the SLR? What happens when we increase the repo rate? So what kind of impact it will have on inflation? Inflation will be controlled or inflation will increase when you increase SLR and repo rate? Okay, inflation will be brought under control. Okay, brought under control. Now when it comes to exam, they are not exactly asked even once the difference between SLR and marginal standing facility, but we have discussed. Now whether to such an extent that knowledge is required, okay, for understanding purpose it is required, but from exam point of view it is not required. Okay, we have seen that in few cases we have to dip into the SLR securities, and in some cases we do not require the dipping into SLR securities. So all those things, okay, so you will not do it here. Now when you are preparing the question paper, just superficial level you will prepare. Okay. Next. Those who join in online mode, whether it is clearly visible?
Yes, sir.
Okay. So here, interest income from the deposits in infrastructure investment trusts distributed to their investors is exempted from any tax, but the dividend is taxable. Next, INVITs are recognized as borrowers under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. Okay. So here in the previous class we discussed about alternative investment funds. Okay, alternative investment funds. Now during the discussion, what did we list? Whether we listed INVITs as alternative investment funds? Okay, then probably that discussion was wrong. Okay, we made a mistake, so we'll rectify. So what is the rectification? So just real estate funds or infrastructure investment funds, they are considered as alternative investment funds, but infrastructure investment trusts, they are not considered as alternative investment funds, because these alternative investment funds, these terms, they come from SCBI. So SCBI, it makes different kinds of rules and regulations. So there are one regulations for alternative investment funds, another regulation for real estate and infrastructure investment trusts. So as the regulations are separate, for them, we will not call them as alternative investment funds. Okay, again, if you want, you can cross verify once, because why I am just focusing on these detailed aspect. Already they have asked about infrastructure investment trust. So there is similar kind of trust also exists for real estate investment trust. Okay. Next, already the question also has appeared in the context of alternative investment fund. So in the next year, they may club the different concepts together and they may frame a question like this. So infrastructure investment trust and real estate investment trust. So whether they are considered as alternative investment funds as per the SCBI? No, because SCBI has made a separate regulation for infrastructure investment trusts and REITs. Okay, REITs. Whereas all the other things, they come under alternative investment funds. Okay, alternative investment funds. It means based on this question, we need a more clarity when it comes to the difference between alternative investment funds and INVITs and REITs. Okay, REITs. Okay, REITs.
Only infrastructure funds comes under AITs.
Infrastructure, yes, just if they do not use a term called as investment trust, then it comes under AIF. But if the term investment trust comes, then we have a separate regulation for the same. Okay, separate regulation for the same. Now again, we will not discuss what is the difference between those fund and investment trust. We are not going to make the discussion. For your clarity, if you want, you can just go and explore more, but we will not be doing this. Just I am giving you a clarity, what kind of questions can be framed. Okay, what kind of questions can be framed. And our approach also, when we are going through the different questions, it has to change, it has to evolve. Okay, we should cross connect the different aspects and try to frame a different kind of questions in our mind and try to find a solution to the same. Okay, try to find a solution to the same. Okay, again, you will cross verify here. Now, interest income from the deposits in infrastructure investment trust distributed to their investors is exempted from any tax, but the dividend is taxable. Okay, very important aspect. It's a very, very generic. Any investment, okay, any investment, some social investments, okay, for example, after retirement, some savings and all, they may be exempted from some kind of taxes. Okay, again, complete exemption will not exist. Now you are investing in infrastructure with the intention of making profit. Okay, with the intention of making profit. So whether it is interest or whether it is dividend, nothing is exempted from tax. Everything is taxed. Okay, everything is taxed. So here we need to have a generic approach. Okay, we need to have a generic approach. Whether it is infrastructure investment trust, okay, whether it is real estate investment trust or any other investment, so they are not exempted from any kind. They are not exempted from tax. Okay, all of them they entail some kind of tax, and tax has to be paid. Okay, tax has to be paid. So first statement is wrong. Okay, first statement is wrong. When first statement is wrong, what's the answer? Yes. Okay, obviously it is first one is incorrect and fourth is the answer. Now if you look at the second option, INVITs are recognized as borrowers under the Securitization and Reconstruction of Financial Assets and Enforcement of the Security Interest Act. So in the shortcut it is also called as SURFACE Act. Okay, SURFACE Act. Okay, so here in this year I have added some detailed aspects related to SURFACE Act. You can go through it. Okay, you can go through it. Anyone who takes loan, who borrows money, he will be considered as a borrower under the SURFACE Act. Okay, under the SURFACE Act. From this option, we got to know that INVITs are considered as borrowers under SURFACE Act. How about REITs? Obviously, they will also be considered as borrowers under the SURFACE Act. Okay, SURFACE Act. Next, we will search about what is SURFACE Act. So, I already included in the notes. What is SURFACE Act? When the SURFACE Act will be invoked. Okay, if a company, if a corporate company takes loan from the bank, can it be called as a borrower under the SURFACE Act? Yes. If an individual like me, if I take a loan from the bank, can I be called as a borrower under the SURFACE Act? Yes. Okay. So this basic level of clarity should be built with respect to SURFACE Act. And in detailed made discussion in the notes, so you can just go through the content. Okay. So INVITs are recognized as borrowers. INVITs, REITs, corporate companies, individuals, all of them are considered as borrowers under the SURFACE Act. Okay. So under SURFACE Act, whoever has gone for default, so some action will be taken against them. So what is that action? You will be going through the detailed aspects in the notes or our previous classes. Okay, previous classes. So this is a previous year current affairs based question. Now it does not have much relevance. Okay, because already pandemic is over, so almost 4 years have elapsed. So this question repeating or any indirect question related to it appearing are the chances are very rare. So just based on previous year, we shall just understand that in the post-pandemic recent past, many central banks worldwide had carried out interest rate hikes. Okay, so after we shall understand that after pandemic, okay, 2019 COVID-19 pandemic, so central banks like RBI in India and many other central banks of different countries, so whether they had increased the rates or they had decreased the rates. Okay, they had increased the rates. Okay, they had increased the rates. So from previous year, we'll get to know that they had carried out interest rate hikes. That's it. Okay, that's it. Now, central banks generally assume that they have the ability to counteract the rising consumer prices via monetary policy means. Yes or no? So the monetary policy, through monetary policy, what is the intention of monetary policy? Growth, right? Growth is the major intention of the monetary policy. Yes, it is stability, to control the inflation. Whether growth is one of its objective? Okay, it is secondary objective. The primary objective is to control the inflation. Okay, control the inflation. Now, see, if you look at consumer prices, monetary policy, we want something to revise from this question. Again, we'll revise. So consumer prices. So in India, inflation is calculated by different ways, right? One is wholesale price index based inflation, consumer price index based inflation. What next? GDP deflator. There are various measures. But now, when it comes to monetary policy, if we take India into account, so which inflation do we target? CPI or WPI? CPI. We target CPI. Now, when I say CPI, what you should be able to do? You should be able to recall the components of CPI in the decreasing order. So, will you be able to recall the components of CPI? Yes. Food and beverages. Next. Miscellaneous. Housing. Clothing. Footwear.
Clothing, footwear and clothing.
Pan tobacco intoxicants. Now you are getting confused somewhere. Wherever you are getting confused, today you will become perfect with what CPI. So you should be able to recall the list in the decreasing order of their weights. Okay. On top of that, who releases the data pertaining to CPI? Ministry of Statistics and Program Implementation. Ministry of Consumer Affairs. Ministry of Commerce and Industry. Okay. Now what is the base year for CPI? Yes. Who releases it? Statistics and Program Implementation. Who releases WPI? Ministry of Commerce. See, these which cause confusion, we should become perfect with it. Okay. So we should not get confused. Ministry of Commerce releases WPI data. Ministry of Statistics and Program Implementation releases CPI data. Okay. Now what is the base year for CPI? Okay. 2011-12 has been considered as 100. Now recently there were discussions about the changing the base year. Now what we will do, every now and then, if we have not gone through the current affairs part and all, we'll just check whether the government has changed the base year. Okay. Every now and then we'll just check whether the government has changed the base year. Okay. So base year might have been taken to 17-18 or somewhere, but presently the base year is 2011-12 and it has been considered as 100. Okay, 100. So that we'll revise. Now what is the weightage of food within the CPI? 45%. When we are preparing for CPI, simultaneously what you will do? You will prepare for other inflation related things. For example, you will prepare for WPI. Okay. So WPI, which ministry releases the data? Ministry of Commerce and Industry. Okay. Next, which are the components of WPI? Manufactured products, mining.
Power.
You are getting confused with index of industrial production. Manufactured products, primary articles, fuel and power. What is the weightage of manufactured products? Yes. Approximately 64 to 65. What is the weightage of food in WPI? 25%. Among CPI and WPI, which one accounts for the services? CPI accounts for the services. So all these things you should be able to revise. Okay. Next, monetary policy. Again, same things. Which are the tools of monetary policy? Who are the part of the monetary policy committee? So all these things repeatedly we have to revise. Okay. We have to revise. So what's the answer here? So answer here is both 1 and 2 are correct, and 2 is the correct explanation for 1. But now this question does not carry relevance because already pandemic is over. But based on this question, whatever the topics which appear here, so it should help us to revise. Okay, it should help us to revise. Next, which one of the following activities of the Reserve Bank of India is considered to be part of sterilization? Okay. Conducting open market operations, oversight of settlement and payment systems, debt and cash management for the central and the state governments, regulating the functions of non-banking financial institutions. Okay. Okay. Sterilization. Okay. It is part of open market operation. Now see, what is sterilization? If you want, you can go in detail. I don't know whether we have discussed in the normal class or not, but sterilization. So what is open market operation? Buying and selling of government securities. Okay, buying and selling of government securities. So when there is inflation, if you want to control the inflation, okay, so RBI what it will do, whether it will buy the government securities or sell the government securities. Okay, see, so these things, all those things we should connect. Okay, should connect. When there is inflation, in order to control the inflation, what you will do? You will sell the government securities. So when you sell the government securities, whatever the money is there with the banks and the public or in general, so it will come with RBI. So the total money supply will come down. So as the money supply gets reduced, the inflation will be brought under control. Okay, it will be brought under control. Now similarly here, sterilization, specifically we do it in the context of what? When there is a heavy flow of inflow of dollars. Okay, suddenly the dollars flow will increase. See again how exactly the detailed aspect we will not discuss here. Okay, you can go to our normal classes or other classes where we have discussed, or even if you want you can just search 1 or 2 lines, but we will not be discussing those detailed things. So because of the sudden flow of dollars, it may have an impact on inflation. How exactly it will have an inflation we will not discuss also. So because of the sudden flow of dollars, it will have an impact on inflation. So to control such imported inflation, Okay, because of this dollars, sudden flow of dollars, whatever the inflation is taking place, to control that, we conduct a special kind of open market operation. Normally, we will conduct open market operation on day-to-day basis or one or the other time, but this is only in case of dollars-driven open market operation, which the RBI will conduct. So that is called as sterilization. Okay, that is called as sterilization. Okay. So now just we shall understand that sterilization is part of open market operation. Okay, open market operation. Now here, see, open market operation, whether open market operation is a tool of monetary policy? Yes or no?
No, sir.
Open market operation is a tool of monetary policy, because in repo and reverse repo, okay, what you will be doing? You will be selling and buying the government securities. So it's a tool of monetary policy. Repo, reverse repo, monetary, open market operations. Next, liquidity adjustment facility. Okay, marginal standing facility. All these are what? Tools of monetary policy. Similarly, open market operation is also a tool of monetary policy to control inflation. Here you are involved in buying and selling of government securities. So when the inflation is too high, you will sell the government securities. When the inflation is under control and you want to promote growth, what you will do? Buy the government securities. Buy the government securities. And especially we will carry out this open market operation when in the context of dollars, that we call it as sterilization. Okay. So sterilization is not a regular activity. It's a once in a while activity. Okay. Once in a while activity, an exceptional activity. Okay. Exceptional activity. So now from this we understood what is sterilization, what is open market operation. Now if you look at the second option, oversight of settlement and payment systems. Okay, who is involved in the oversight of the settlement and payment systems? Okay, RBI. Now already we have seen settlement and payment systems. So which are the different settlement systems? Not that important, but in the notes I have made a list. Important settlement system. But for us more important is payment system. Okay, payment system. Already I have listed the payment systems as well, and in the previous year, the previous class when we were having discussion, we also came across few payment systems as well. So can you recall a few payment systems? RTGS, NEFT, yes, UPI, IMPS, and many other things. Okay, many other things. So now again, these payment systems important. RTGS is managed by whom? RBI. NEFT, RBI. Difference between NEFT and RTGS. Which one is instantaneous? RTGS. Okay. So which one is 24/7? Both of them. Okay, both of them. Next, UPI and IMPS, they are managed by NPCI, National Payment Corporation of India. Okay, Payment Corporation of India Limited. So those things you will revise. Next, debt and cash management for the central and state government. For the central government, debt management is done by whom? RBI. For state government, RBI. This is very important. So debt management of central and state government. So both these functions are carried out by RBI itself. Okay, RBI itself. Next, regulating the functions of non-banking financial companies, non-banking financial institutions. Who will do it? RBI. Okay, RBI is involved in the regulation of non-banking financial companies as well. So even these options based also, just we shall have a revision. Okay, if we are able to connect, then it will build a what? A comprehensive approach. Okay, a comprehensive approach. So answer is A. Okay, conducting open market operations. Okay, so next. So consider the following markets: government bond market, call money market, treasury bill market, stock market. How many of the above are included in the capital market? How many of the above are included in the capital market? Okay, so what is capital market? When you raise funds for a period of more than 1 year, that is called as capital market. And when you raise funds for a period of less than 1 year, we call it as money market. Okay, money market. So here, this question tests you on whether you are able to identify the instruments of capital market and the instruments of money market. Okay, money market. Now here in the options, so government bond market, whether it's for less than 1 year or more than 1 year. More than 1 year. Call money market. Okay, have we discussed it as part of money market instruments? So here money market instruments. So which are the money market instruments? Call money. Next. Call money. Next. Treasury bills. Next. Yes. Cash management bills. Next. Repos is there. Yes, repos is there. Next. Commercial paper. Certificates of deposit. Yes. Collateral. Borrowing and lending obligations. So all these are what? Money market instruments. Okay. As these are money market instruments, what we'll do? So we'll remove these two. Okay. Now stock market. So obviously it's a capital. So see here, there will be a confusion. What will be the confusion? When you participate in the stock market, generally you buy shares today and you sell shares tomorrow. Okay. It's for less than just one day, right? So can it be called as a money market? No. So when you participate in the stock market and when you buy and sell, you are participating actually in the secondary market. But in the primary market, when the share is created, so it will be for a long period, it will not be for a short period. So when it comes to stock market, we are not speaking about secondary market, we are speaking about the what? Primary market. Okay, primary market, very important. Okay, so often it will cause confusion. Next, obviously, government bond market means we are speaking about dated government securities. Okay, dated government securities. Now, when it comes to treasury bills, can a state government issue a treasury bill?
Yes.
No, state government cannot issue a treasury bill. When it comes to dated government securities, who can issue? Central government and state government. Okay. So these basic aspects again we'll revise. Okay, we'll revise. Now government bond markets, they are regulated by whom? RBI. Stock market is regulated by whom? SEBI. Okay. So next, money market is regulated by whom? Okay. Predominantly it is RBI. Predominantly it is RBI, and to some extent SEBI. No, SEBI will not come into money market. RBI will come into picture here. Okay. Means just we will not focus on these questions. Already we know the answer, we know the concept. But what extra things out of curiosity we can add from the exam point of view? Okay, that will make the difference. Okay, that will make the difference. See, all these terms will appear in the newspaper. But in newspaper, as I have mentioned, they assume that already you know everything about the economics. But here our intention is to build that background, okay, to the required extent, not as from the expert point of view, but from a generalist point of view, okay, generalist point of view. So answer is, what's the answer?
Two.
Only two. Which are the two? Government bond market and stock market, okay. Okay. Now, okay, capital market, see here. Stock market is example, stock market and government bond market. Which are the other examples of capital market or instruments of capital market? Okay, so stock, okay, bond, debentures. There are many other things, but again we are not interested in the entire list. Okay, we are not interested in the entire list. At least one or two terms, if we are aware, then we'll get to know that. Yes. No, they are not capital market. We have to check whether alternative investment funds are considered as part of. See, you raised a valid question. You can just cross verify whether alternative investment funds, investment in alternative investment funds can be considered as part of capital market or not. Okay, whether investment in real estate investment trust and infrastructure investment trust, whether it can be considered as a what? Part of capital market or not. So already questions have appeared. Extra out of curiosity you can search. But this exercise you will not do exhaustively. So whichever important entities that have flashed in your mind and you are able to generate a question, so those concepts you will add here and you will just search whether they are part of the capital market or not. Capital market or not. They are part of capital market, best, then we will add it. So here itself in the question paper itself we will add it. So alternative investment funds, they are considered as part of capital market. How about investment in REIT and INVIT? Just search it once. So based on the definition, actually they should also be what? Qualified to be called as part of the capital market. Just search it once. Yes, capital market. Okay, just add it. So REIT as well as INVIT. So all of them, they are considered as part of capital market. Capital market. Now you will stop. You will not go for the list of exhaustive list of all the different instruments and try to search. You will stop here itself. Okay, we'll stop here itself. Okay, so again this where we can classify, not exactly economics, it can be what? Mapped to different subjects. Okay, so directly here we are interested in answer. What is the answer for this question? Small farmer, large field. So many marginal farmers in an area organize themselves into groups into groups and synchronize and harmonize selected agricultural operations. Okay. For example, if you require a tractor, so multiple farmers together, they will purchase a tractor and they will use it for their purposes. Okay. So that is the definition of what? Small farmer, large field. So these kind of terms will not appear generally in the new business page. They will appear as part of the editorials. So whenever an editorial related to agriculture, something appears, so somewhere hidden such kind of terms will appear. So based on those terms, we should note them down. Okay. And also if you look at the options, some of the options you should be able to easily eliminate. So what is the first option? Resettlement of a large number of people uprooted from their countries due to war by giving them a large cultivable land which they cultivate collectively and share the produce. Okay. So this is practically not possible. Okay. Next, many marginal farmers in an area together make a contract with a corporate body and surrender their land to the corporate body for a fixed term for which the corporate body makes a payment of agreed amount to the farmers. Okay, it may appear true. If you are not aware, it may appear true. A company extends loans, technical knowledge and material inputs to a number of small farmers in an area so that they produce the agricultural commodity required by the company for its manufacturing process and commercial production. So this may also appear true. Okay, if you are not aware, then they may appear true. So hence here perfect knowledge is important. Okay, knowledge is important. So probably I think 2020, 23 itself we are discussing, right? Okay. So here next. So this question can be mapped to both agriculture as well as to some extent to economics as well. Okay, economics as well. Now consider the following statements. Okay, the government of India provides minimum support price for Niger seeds. Okay, Niger seeds. Niger is cultivated as a kharif crop. Next, some tribal people in India use Niger seed for oil for cooking. So here this question paper is a base. What we are supposed to prepare? Minimum support price, MSP. Okay, minimum support price. So which are the crops that have been offered minimum support price? Okay, so there are 22 plus 1, 23 crops which have been offered minimum support price. So what we can do? See, in the actual notes we have all that content, but here the required amount of content you will just bring it. So you will make a list. So cereals. Okay, next oil seeds. Next pulses. Okay, pulses you will make a list. So which are the cereals that are offered? Rice is there, wheat. Next, rice, wheat. Bajra is there. Bajra. No, tur is a pulse. Okay, we are just focusing on cereals. Yes. Bajra is there. Next, jawar is there. Jawar. Next. Over. Yes. Barley is there. Okay, ragi is there. Good. Next, oil seeds. Groundnut. Next, soybean. Next, sunflower. Niger seed. Safflower. Over. Okay. Next, pulses. Moong. Tur. Chickpea. Urad. Okay. So this entire list you list here. Now you got to know that Niger is part of it. Okay, Niger seed is part of it. Next, Niger is cultivated as a kharif crop. Again, this is very important. Okay, so already we have made the list under the agricultural topic, the list of kharif and rabi crop. Okay, there are some crops which are grown exclusively in rabi season. There are some crops which are grown exclusively in what? Kharif season. And if the crop is missing in both of them, it means the crop is cultivated both as a kharif crop as well as rabi crop. And again there are small confusions. Some crops in the northern part of India they grow it as a kharif crop. In the southern part of India they will grow it as a rabi crop. So there will be confusion. So that confusions related thing also I have mentioned in the notes. You can just go through it. Okay. And generally whenever they mention such kind of statement is cultivated as a kharif crop or rabi crop, generally the statement will be correct. Okay, generally the statement will be correct. But anyhow, we have a content. From that content, you can note that second statement is true. Okay, second statement is true. Next, how many of the above statements are correct? Okay, next third one. Some tribal people in India use Niger seed oil for cooking. Okay, so see, they have mentioned about some tribal people. Okay, Niger seed. So probably they may use it for what? Cooking. So what is Niger? Okay, in Kannada, what do we call it as? So whether it is edible? Okay, so now in the examination, similarly, if they make a statement, there are some tribal people in India who use castor seed for cooking purpose. Castor seed, they use it for cooking purpose. True or false? No, castor seed is never used for cooking purpose. See, when we see Niger, so it's a edible content. So its oil can be used for cooking purpose. But if they mention about castor, it's not possible. Okay, it's not possible. So that basic understanding also is important. So whatever oils that have been mentioned here, whether all of them are edible oils? Yes. So all of them are edible. So all of them in one or the other place, they can be used for cooking purposes. Okay. So based on this, we'll be able to answer the question. Okay, answer the question. Now next, if you want to go beyond minimum support price, the other aspects that we can connect here. So who fixes the minimum support price? Ministry of Agriculture will fix the minimum support price. Who will fix?
CS.
Ministry of what? Consumer Affairs, Food and Public Distribution, they will fix it. Cabinet Committee on Economic Affairs will fix the minimum support prices. Okay. So who is the chairman of Cabinet Committee on Economic Affairs? Prime Minister. Okay. So to fix these prices, someone should give the recommendation, right? Who will give the recommendation? CACP, okay, Commission on Agriculture Costs and Prices, right? So these commission, when it is fixing the prices, okay, it is fixing the prices, it is based on some parameter, okay, A2 plus FL and C2. So presently government is offering the minimum support price based on the formula of A2 plus FL or C2. A2 plus FL. But what are the farmers demanding? C2. Okay, so when this question comes, all these different points we should be able to connect, and we should prepare what in a comprehensive manner. So this one question should what help us to what recall different concepts, and it should help us to connect these things. Okay, connect these things. Next. So consider the investments in the following assets: brand recognition, inventory, intellectual property, mailing list of clients. How many of the above are considered intangible investments? Okay, intangible investments. Okay, so what are intangible investments? Okay, generally what they do not exist in physical form, and they'll give us returns in the very long term. Okay, long term. So what is inventory here? Okay, inventory means whatever you have produced, you have kept it somewhere in the go down. That is an inventory. Okay, that is an inventory. So whether inventory is tangible or intangible, it's what? Tangible. Next, brand recognition. Yes, it's intangible. Intellectual property, intangible. Mailing list of clients, phone numbers of clients. So intangible. So this much basic understanding will help us. Okay, will help us. So the first time they had asked such kind of question. So based on examples itself, we should be able to connect. Okay. If you want, you can generate few more examples and just try to see which of them are considered as intangible investments. Okay, intangible investments. So what's the answer here? We not only 3. So 15th Finance Commission. In 2024, I think there was no question. But in 2025, there was a question on indirectly 15th Finance Commission. Right? In 2015, we saw, in 2025, we saw a question wherein we were able to eliminate just based on one criteria. What was that criteria? The devolution is, as per the 15th Finance Commission, what is the devolution? 41%. Okay. So that is vertical devolution or horizontal devolution? Vertical devolution. In 2025, it was based on vertical devolution that we were able to eliminate an option and arrive at the correct answer. In 2023, they have focused the same question, but what kind of devolution? Horizontal devolution. Okay, horizontal devolution. In this context, you have to what prepare about Finance Commission. Okay, so some basics of polity, that is article number 280 and all. So which are the what? For the horizontal tax devolution, the 15th Finance Commission used how many of the above as criteria for the criteria other than population, area and income distance? Means already in the 15th Finance Commission, we have population, we have area, we have income distance. Okay. So which are the other parameters that they have used? Demographic performance they have used? Yes. Forest and ecology they have used? Yes. Governance reforms? No. Stable government? No. Tax and fiscal efforts? Yes. So answer is what? 1, 2 and 5. That is only 3. Okay, only 3. Now, 16th Finance Commission has already given the recommendation. So, what we will do? Whether in the open domain, if these parameters exist, simultaneously here you will write about 16th Finance Commission. Here itself in the question paper which I have shared with you, you just write these things. Okay. You will just write these things. Okay, write these things. So, 16th Finance Commission, what are the parameters? Okay, we will write those parameters. Apart from that, already whatever you have prepared, the parameters: population, area, income, distance, demographic performance, forest and ecology, tax and fiscal efforts. Which one has the highest weight? Income distance. What is the weightage? Yes. 15? 45%. 15 Finance Commission, 45%. So what we will do? Income distance, 45%. Okay. So whether 16th Finance Commission recommendations exist? 42%. Okay. Income distance, 42.5. So what you will do? You will make a what? Match the following kind of thing. Okay, 2 tables. So here it is 40, 45. Next it is 42.5. Next. Whether any of these parameters have been removed? Which parameter has been removed? Tax and fiscal efforts. This parameter has been removed. Very important. So this parameter is removed. You will mention it. Next. Contribution to GDP. So it has been replaced by contribution to GDP. Okay, contribution to GDP. Next. Or okay. So highest weightage is again same income distance, but it has been reduced to 42.5. How about the weights of other parameters? Okay, minimal changes, but not that important. Okay, not that important. We'll focus on the highest weight and other things. So now you'll prepare for both 15th Finance Commission as well as 16th. You are not going to ignore 15th because sometimes they may ask a question based on comparison. Okay. Now 14th Finance Commission is outdated, not important. But 15th Finance Commission and 16th Finance Commission, both the recommendations are important. Okay. So both of them, both the recommendations and the provisions we'll prepare. Okay, we'll prepare. So from this we understand how important the Finance Commission is, because 23 there is a question, again 25 there is a question. Okay. It is not necessary that again in 26 they have to ask a question. Okay, but we have to prepare. Okay, we have to prepare. So here, okay, answer is only 3. So this question, consider the following infrastructure sectors: affordable housing, mass rapid transport, healthcare, renewable energy. So how many of the above does UN OPS Sustainable Investments in Infrastructure Innovation System Innovation Initiative focus for its investments? So this question, okay, we know the answer, but for the upcoming year we do not have a proper strategy. Okay, so we can what based on previous year we will prepare. UN OPS is initiative of which organization? Yes. UN Habitat, UN OPS Sustainable is the initiative of which organization? Okay, so otherwise what we'll do, we'll just leave this question. Why? Because now we'll just prepare for the answer. What is the answer for this question? What is the answer? Previous year question. What's the answer? I think it will focus on 3: affordable housing, mass rapid transport. Just check what is the answer. Only 3 I guess, but which 3 I don't know. Affordable housing, mass rapid, renewable energy, right? So just previous year will prepare. See, similar kind of questions are going to appear. When we completely don't have any idea, what we are going to do? We are going to skip that question. Okay, we are going to skip that question. Okay. United Nations, which organization? No, there is a particular organization which is with which it is associated. Okay, UN Office and Project Services. Okay, that is the initiative of that organization. UN Office for Projects and Services. UNOPS full form, UN Office for Projects and Services. Okay, so what we can do here is UN Ops, whether it is a specialized agency of UN under UN DP. Okay, that is very important. So UN OPS, it works under UN DP. Okay, so some extra information based on this question you can prepare. Otherwise, see, it may be a current affairs question. So, in which magazine it has appeared, in which newspaper it has appeared, we don't know. So, what we will do, we will not give much importance to such kind of questions. We will not waste our time, precious time, in exploring the content for this question. Okay, this question. Okay, so just based on previous year, we got to know that it is only 3. Okay, only 3. Now, in this context, what you can do? You can revise the international affairs related thing, but now we are not going to discuss. Okay, United Nations, what organs of UN, specialized agencies of UN, programs and funds of UN, all those things we are going to revise. Okay, we are going to revise. But when we once, yes,
Self-finance.
UNDP, no, okay, we'll verify later on. We'll verify later on. We'll not get stuck there itself. Next, according to micro, small, and medium enterprises. The medium enterprises are those with investments in plant and machinery between 15 crore and 25 crore. Okay. So this definition again recently it has changed. So what we have to do here? You have to what? Write the content here itself. So micro, small, medium enterprises. Micro, small, and medium enterprises. So here. So what is the investment range? Okay, investment range you will write down. So what is the investment range for micro? Yes. So recently we discussed what is the investment range for micro, small, and medium enterprises? 2.5 to 5 to 10. For small, 25 to 100. Next, medium, 125 to 100. 500. Okay, 500. So whether only it is with respect to investment or also turnover? Turnover as well, because previously there was a definition for both investment as well as turnover. Yes. The second one indicates turnover. Okay, I thought investment range from 125 to 500. Okay. Then what will be the investment? What investment range is considered as? What is the investment range then? Where? Minimum 2.5 crore or up to 2.5 crore? Okay, up to 2.5 crore investment. Here up to 25 crore. Means more than 2.5 crore and less than 25 crore?
1 to 2.5 within 2.5 investment 25 crore.
Within 2.5 crore it is called as micro. Okay. Then within 25 crore? Small. Means more than 2.5 crore and less than 25 crore is small. Medium? Okay. More than 25 crore and
up to 25 crore.
Up to 25 crore?
100 crore.
Okay, turnover you don't mix, again you will get confused. Only focus on investment. You will make 2 tables. One is on investment, another one is on turnover. Okay, turnover. So that table you are going to write it here itself. Okay, so that turnover is 10, 100, 500. Okay, so you will create 2 tables. One is for investment, one is for turnover. Okay, again whether it is separate for manufacturing and services or it is same. Because previously there was a different definition for manufacturing and services. Now it is same. Okay, same. You just update the table. Now based on this table, repeatedly you will revise it. So the first option, okay, in that through 2023 also this option was wrong. Okay, wrong. Now next the second option. Okay, so first one easily you will be able to answer if you know the table properly. Okay, so what you will do afterwards, you will give some time and you will prepare a table properly. So during revision, repeatedly you will revise this table. The second point is very important. All bank loans to the micro, small and medium enterprises qualify under the priority sector. So we need to know about the priority sector and priority sector lending. So already we have discussed in one of the classes. So priority sector lending, right? So in the total loan that has been given, some amount has to be given to some specified sectors. That is called as priority sector. So which of the how many in the different sectors are called come under priority sector? Education. Next, agriculture. MSMEs, they come under priority sector. And already this kind of question has also appeared in 2012 or 13. It means it's a very important topic. Okay, very important topic. Now the tricky part here is, okay, all the bank loans to the MSME, whether it is qualified under the priority sector, what is the answer? True. It is true. So this is very important. Means the bank it has to show to the RBI that I have satisfied the priority sector requirement. So it can give all the amount to what MSME, and it can say that it has qualified under this what priority sector lending. Okay, priority sector lending. Now, based on this statement, if I make a statement like all bank loans to the students qualify under priority sector, true or false?
False.
It will be false. Okay, it will be false. Okay, because as per the RBI rules and regulations, if you give all the loan to only students, okay, all the loan will not be considered as priority sector. For example, if to students, for example, 1 crore loan is given, then only somewhere around 40 lakh or 50 lakh will be considered as priority sector lending. The rest all will not be considered as priority sector lending. Okay. Similarly, if you extend the loan to farmers, whether all the loan will qualify under priority sector? No, only some part of it will qualify under priority sector. But all the loan which you give to MSME, it will be qualified under what? Priority sector. So this point is very confusing, so very important also. Okay, MSME loan, all the loan which a bank gives to MSME, it comes under priority sector. But all the loan which you give to students, all the loan will not be qualified. Only some part of the loan will be qualified. What part? Not important. Okay. Similarly, the loan which is being given to agriculture sector, all the loan will not be qualified under priority sector, but some part of it will be qualified under priority sector. Okay, priority sector. So this priority sector is very important. Now, out of curiosity, what you will do is, this priority sector lending norms, who all should follow? Whether Indian banks or also foreign banks? Both Indian banks as well as foreign banks. When it comes to Indian banks, whether scheduled commercial banks or also cooperative banks. Okay, so cooperative banks as well as scheduled commercial banks. Okay, scheduled commercial banks. Whether public sector banks or also private sector banks. Both public sector banks as well as private sector banks, both of them, they have to follow the norms. So based on this priority sector lending, so these are the extra things that you will add. Okay, out of curiosity. Okay, out of curiosity. So here officially what is the answer? Okay, only 2. Okay, only 2. So, with reference to central bank digital currencies, okay, consider the following statements. It is possible to make payments in digital currency without using US dollar or SWIFT system. Okay, so this SWIFT system, it appears in the newspaper. SWIFT system. So, what is SWIFT system? For international transaction of the money. So, this SWIFT system will not directly help you for transaction, but it will help in the exchange of messages. Okay, so central bank digital currencies. So it is possible to make payments in digital currency without using US dollar or SWIFT system. See here, in the question, in the option, if they had included international transactions, then it would have created confusion, because they are not mentioned about international transactions. They are not mentioned about international transactions. So within domestic transaction, if you are making any kind of transaction, then we do not require what? SWIFT system. Okay, we do not require dollar. Now next, your question is when you are using central bank digital currencies, okay, and if you want to transfer from India digital currency to a person who is residing in, let's assume, USA, so do we require SWIFT system? Okay, do we require US dollars? So that extra point you can search. But within India, to make these transactions, we do not require SWIFT system, because only for international transactions, normal transactions, we require SWIFT system. So how about CBDR? We have to search it. Okay, we have to search it. Next, a digital currency can be distributed with a condition programmed into it, such as time frame for spending it. Okay, so very important. So digital currencies, what we can do, whenever a digital currency is being issued, so we can fix a time frame that within 2 months you should spend it. Okay, so that is the advantage of digital currency. Okay, now why this topic has come into why this topic is important? Because it will help us to eliminate what? Corruption. Now whatever the money which you make, see, you will earn what? Crores of rupees, and you will keep for generations together. But rather than that, if you make a digital currency and you will fix a goal, it has to be spent only within 2 months. Okay, after 2 months, the digital currency is not valid. Okay, one. Similarly, it can be programmed for what other purposes? So one is time frame, another is for what purpose? Okay, what purpose? For example, a digital currency which has been given to you, only if you go to public distribution system, fair price shop, then it will work. If you go to a wine shop, it should not work. Okay, so it can be programmed in such a way that it can only work in a particular outlet, not at all the places. So in this fashion, what we can ensure is the money which is being transferred, okay, is being utilized in a proper way. Okay, proper way. So especially in the context of distribution of government what subsidies. Okay, subsidies. These things can be very much beneficial. Okay, very much beneficial. So here the second statement is correct. So apart from time frame, it can also be, we can also program in such a way that on which particular entity they can spend, whether they can spend on food or whether they can spend on jewelry or whether they can spend on what liquor and all. So it can be what programmed into the currency itself. Okay, currency itself. So here the answer is 2 only. Now in the recent years, see, UPSC has been focusing more on central bank digital currency. Okay, next cryptocurrency, blockchain. So these are very important topics. Okay, wherever we have a confusion also, we'll try to overcome those confusions. Again, we'll not get a complete picture, but at least partial picture that is expected from the exam point of view. We have to build that picture. Okay, we have to build that picture. Okay, important.
Both are correct.
Oh yes, both are correct. Here it is without, right, without using. Yes, both are correct. Okay. Here without using we can do it. So that is also correct, and 2 is also correct. Okay. So in the context of finance, the term beta refers to the process of simultaneous buying and selling of an asset from different platforms. Next, an investment strategy of a portfolio manager to balance risk versus reward. A type of systemic risk that arises where perfect hedging is not possible. A numeric value that measures the fluctuations of a stock to changes in the overall stock market. Okay, so it's a bit technical. So based on this, I have prepared the content. Okay, so what's the answer here? Yes. A numeric value D. Similarly, I included the technical term which is used to refer to this, a type of systemic risk that arises where perfect hedging is not possible. What it is called as? Next, the process of simultaneous buying and selling of an asset from different platforms. An investment strategy of a portfolio manager to balance risk versus reward. So these terms I have added in the notes. You just go through it. Okay. So this term, what it is called as, you just add those terms here itself. So at the time of examination, you are not going to go through the content. You just revise this question paper repeatedly. Okay, you revise this question repeatedly, and also you need to know what is this process. The process of simultaneous buying and selling of an asset from different platforms. Okay. For example, one is Bombay Stock Exchange, another one is National Stock Exchange. On Bombay Stock Exchange, you will buy it. On National Stock Exchange, you will sell it. Just an example to retain the content. An investment strategy of a portfolio manager to balance risk versus reward. Okay, so portfolio manager, what he will do? He will buy some shares of TCS. He will buy some shares of Infosys. So rather than buying many shares of one company, he will buy what? Small amount of shares of different companies. So that if one company does not perform well, at least the other will perform well, and at least there will be some kind of profit which you can make. Okay. So a type of systemic risk that arises where perfect hedging is not possible. So here we need to understand what is hedging. So yesterday also we saw hedge funds. Here hedging. What is hedging? So to reduce the losses, sometimes of some extra measures which we take, that is called as hedging. Okay, hedging. Did you find out the words? No. Yes. First one is arbitrage. Second one. Okay. Later on you can just add it. Okay. So next, self-help group. The self-help group program was originally initiated by the State Bank of India by providing microcredit to the financially deprived. Okay. So here we can consider this as part of current affairs, or we can consider it as part of static itself. Because if you look at mains syllabus, okay, if you look at mains syllabus, explicitly they are mentioned about the self-help groups. In which part? GS 1, 2, 3 or 4? Yes. GS 3 or GS 2? In GS 2. In GS 2 we have about self-help groups. In that syllabus line we have about self-help groups. We have NGOs, we have charitable institutions and all those things. Okay. So from this perspective, and also if you refer the previous year questions, in 2012 or 13 also they asked about self-help groups. Okay. And self-help groups, they play a very important development role at the grassroots level. And UPSC, it often focuses on the developments that happen at the grassroots level. Okay. So self-help group, a minimum idea we need to have. So what is a self-help group? Some members will, they'll form a group. So every week they'll contribute money, and based upon that, there will be a bank linkage program. So common account they'll be having at the bank. So based on the accumulated amount, the bank will give them loan at a subsidized rate of interest. So by using that money, either they can distribute the money or they can start a business. So these are the various developmental activities so that can happen as part of the self-help group. Okay. So self-help group program was originally initiated by the State Bank of India by providing microcredit to the financially deprived. So originally it was started by whom? Okay. It's an important initiative of NABARD. Okay. So here the important component of self-help group is bank linkage program. Okay. So a bank will be associated with the self-help group. Now out of curiosity, what you can search is the bank which is being associated with self-help group. Should it be a public sector bank or even a private sector bank can be part of it? Should it be a public sector bank only or even a private sector bank can be part of it? That extra information you will add. Okay, we'll add. Next, in a self-help group, all members of a group take responsibility for a loan that an individual member takes. Okay. So here an individual member, when we say, the individual member will not go to a bank and take the loan. Now, if the bank gives, let's assume 10 lakh rupees loan to whom? To self-help group. So internally what they will do, they will divide the money. Okay. So one of them will manage it, and whosoever requires money, they will give the money, and also some kind of interest rate will be charged. Now, if that person is not returning back the money, this group will not go and say to the bank that, so all of them have given money, but one person has not given the money. They cannot say that, because all of them are what? Collectively responsible to return the amount of loan which they have taken from the bank. So in a self-help group, all members of a group take responsibility for a loan that an individual member has taken. So this is correct. The regional rural banks and scheduled commercial banks support self-help groups. Okay. So true. So scheduled commercial banks also support, regional rural banks also support. How about cooperative banks?
Yes, sir.
How about cooperative banks? Which cooperative banks? Urban cooperative banks? District Central Cooperative Bank. I am just giving an idea whether a District Central Cooperative Bank can be included as part of the bank linkage program or not. This you have to search. District Central Cooperative Bank, again it's a public sector bank itself, government bank itself. Can it be considered as part of the self-help group bank linkage program or not?
Yes.
Yes. How about private banks?
Yes, sir.
Private banks can also be linked?
Yes.
Okay. Next, whether urban cooperative banks can be linked. For example, a bank which exists in front of our institute, it's an urban cooperative bank. Okay. So whether urban cooperative bank can also be brought under the self-help group bank linkage program? Okay. So these are the various points from which you are supposed to focus. How about PACS, Primary Agricultural Credit Societies?
Yes.
PACS, can they be brought under a bank linkage program? So generally, no. Okay. Because PACS, they do not have that much capacity. Okay. That much capacity to support. And PACS, they are not considered as banks itself. They are considered as primary agricultural credit societies. They are not considered as banks. I am just giving you an idea. Again, it does not mean that every content you should become perfect. Means next time when you are reading, which are the various dimensions from which you are expected to think. Okay. Which are the dimensions from which you are expected to think. That's it. Okay. Cooperatives, so they can be brought. Okay. Cooperative bank can be part of the self-help group bank linked program. Okay, good. So here what's the answer? 2 and 3. Okay, that is only 2. Only 2. So see here, in such kind of questions that will be difficult, because when UPSC officially releases the answer key, it will not say which 2 options. It will just say only 1, 2 or 3. In some of the questions, even after the key answers have been released, we are confused as to which are the correct answers, whether 1 and 2 or 2 and 3 or 1 and 3. Here we have got a clarity, but in some other questions, even after releasing the answer key also, we do not have the clarity, especially in the environment related topics. Okay, environment related topics. Okay. Next, consider the following statements. India accounts for 3.2% of global export of goods. Okay. So, to address this kind of question, we require economic survey. Okay. And not budget, but economic survey. In economic survey, you will find these values. Okay. But to find out this one value, do you want to go through the entire economic survey? No. Even if you search in the Google also, you will get it. Okay. Or from the economic survey, you just ask to extract the information pertaining to what? These things. So hence I will say, don't go through the entire economic survey. So there are some important values which are important. So we'll only go through them. Okay. Not the entire economic survey. But this data definitely you'll find it in economic survey. Okay. So here these values will also not change drastically in one financial year. Okay. The change will be very, very slow. So based on this question, what we will prepare? India accounts for 3.2% of the global export of goods. So already I have compiled the material. Okay. If required, you will update the same material with the recent data, and even the recent data, there will be no significant difference. Okay. There will be no significant difference. So what data will add? 3.2% of the global export of goods. What is the percentage approximately? India's share in the global export of goods. 4%? No. Yes? No, not 3%. Somewhere it is
2.7.
So I have shared the data itself. If you search, okay. Now later on you can search the value, exact value. What you can do here is, there are compiled a table. India accounts for dash percentage of the global export of goods. Dash percentage of the global export of services. Next, India accounts for dash percentage of the global import of goods. Okay. Next, import of services. So once you prepare this list, here the absolute values you will by heart. Generally in other cases what I will mention, absolute values are not important. But here these four data, you will by heart the data. Okay, by heart the data. Next, also what you will do is India's share, okay, percentage in total trade, total world trade, okay, world trade. Next, you will club. So total exports, goods plus services exports. Here they only focused on percentage of global export of goods. So percentage of total exports. So it includes both goods as well as services. Similarly, import share, total goods and services. So around 7 to 8 different figures you will get. So all of them you will memorize. So once you get to know about these things, it will help you to address other kind of questions as well. For example, in the examination, if they frame a statement, okay, India's share in the global exports of goods is less as compared to the India's share in the global import of goods. True or false? Okay, we cannot say confidently until you have a figure with you. Now you can just just make a wild guess. But rather than making a wild guess, if you have those figures, you can tell exactly whether the statement is right or wrong. Okay, so here you'll whatever space is available, you'll make this list and repeatedly you will revise the list. Already we have in our notes, so you bring that content here and you rewrite it here, and if you require an update, you just search in the internet and you update it. Okay, update it repeatedly, will revise. Okay, repeatedly will revise. So the first statement in this question, it is wrong. And generally, okay, those who claim 120 plus and 140 plus, so they will build strategy like whenever there is a value, so that value will be wrong. Okay, but we are not going to build such kind of strategy because we are not interested in 140. We are interested only in 100. Okay, why? Because every time such strategy is being brought, UPSC will break. Okay, will break it. So hence, when it comes to values also, we are not going to prepare for all the values, but in some important cases, we'll prepare values. In yesterday's discussion also we saw. So expenditure of government as a percentage of GDP on health, as a percentage of GDP on education. Okay, as a percentage of GDP on agriculture. These are some important sectors where we will memorize the absolute value itself. Similarly, here we will memorize absolute values. So when we memorize absolute values, so we need not make a wild guess. Okay, we need not make a wild guess. Now, once you memorize what absolute values, you will come to a conclusion that first statement is wrong. So if the first statement is wrong, obviously, what's the answer? Fourth one. Okay, fourth one is the correct answer. But the production linked incentive scheme is a very important scheme. Okay, very important scheme. It repeatedly appears in the newspaper. So what is the goal of production linked incentive scheme? Ultimately, increase manufacturing. Why do you want to increase manufacturing?
High potential.
Yes. Okay, what is the benefit of made in India? You just purchase the made in China and enjoy your life.
High potential.
Yes.
GDP growth.
No, you are missing that important point. Employment. The major intention of Make in India is employment generation. Okay, because already a significant amount of GDP, we have contribution from services sector. GDP is very high in India. Compared to other countries, GDP is really performing well. But the requisite amount of employment generation is not taking place. Because among the agriculture, manufacturing and services sector, which has the highest potential for employment absorption? Manufacturing. Which is the highest contributor to GDP? Services sector. Okay, so services sector has grown significantly and is contributing to the GDP. But when it comes to manufacturing sector, okay, which has the potential to absorb employment, its share is very less. We want to increase its share. So in this context, what we can do? What is the share of agriculture in India's GDP? What is the share of India's manufacturing in India's GDP? What is the share of services in GDP? Okay. What is the employment absorption capacity of agriculture? What are the total employment absorption in presently manufacturing? What is the employment absorption in service sector? So all those things you can connect here. Okay, connect here. After doing this, the Make in India program, which was launched by Narendra Modi in 2016, Honorable Prime Minister Narendra Modi, and also the production linked incentive scheme. Okay, so they are aimed at what? Domestic employment generation. Now, if you look at the statement, so many local companies and some foreign companies operating in India have taken advantage of India's production linked incentive scheme. Okay, so the more the production in India, more the benefits they will get. So whether this scheme is extended only to Indian companies or also it applies to foreign companies as well. Okay, but what is the condition? They have to operate in India, they have to manufacture in India. So whether all Indian companies are eligible to receive this production linked incentive scheme benefits? Okay, so only if they are operating in India. If a MNC company of India, so if it is operating in some other country, it cannot take the benefits. Similarly, a foreign company, if it operates in India, if it has a branch in India, okay, if the production is taking place in India, then they too can take the benefits. Okay, benefits. Already we are aware of the answer, but we also need to know whether the statement is right or not. We have to understand that statement. Okay, so production linked incentive scheme is the initiative of which ministry? It is not a single ministry, multiple ministries are involved. Here we need to understand that who coordinates this production linked incentive scheme. Just search it. Who coordinates the production linked incentive scheme? Rather than who implements it, because one single ministry is not involved, who coordinates the production linked incentive scheme? Yes. What's the answer? Yes, Department for Promotion of Industry and Internal Trade, which works under the Ministry of Commerce. Okay, so this is a agency which is involved in the coordination of what? Production linked incentive scheme. Okay, incentive scheme. So here now almost close to 36 questions we have covered. In the next class, whenever I ask you what is the share of India in the global export of services, you should be able to recall. Global export of goods, you should be able to recall. And if you are not able to do it by next class, then on May 24th, okay, on May 24th you are not going to perform well, because you should set the targets and work accordingly, because we have hardly around 105 days, and in between we have what? Holi as well. So taking all these things into account, effectively we have only 100 days. So these 100 days we have to cover all the subjects, keeping the exams demand in mind. So whatever the targets we are going to set on day-to-day basis, okay, we have to accomplish them. Okay, we have to accomplish them. So which is the northernmost Mahajanapada? Kamboja. Which river flows through it? Yes, Kabul river. Okay. Southernmost? Asmaka. Which river flows through it? Godavari. Okay. So, okay, with reference to the Indian economy, consider the following statements. An increase in nominal effective exchange rate indicates the appreciation of rupee. An increase in the real effective exchange rate indicates an improvement in trade competitiveness. Next, an increasing trend in the domestic inflation related to inflation in other countries is likely to cause an increasing divergence between near and rear. Okay, in the regular classes we have discussed in detail. Okay, we have discussed in detail. You can just go back to that class once. Okay, you can go back to that class once. So here, what is the difference between rear and near? Rear. Near. So which one is inflation adjusted? Adjusted for inflation. Yes, RER. Okay, so whatever the inflation related things we have calculated and then we have taken into account. Okay, we have taken into account. So, sorry, rear, not near. Okay, right. Now, okay, an increase in nominal effective exchange rate indicates the appreciation of rupee. An increase in the real effective exchange rate indicates an improvement in trade competitiveness. Okay, when it comes to trade sorry. So when it comes to trade competitiveness, generally which one we'll use? Near or rear?
Trade competition.
Which one we'll use? Near? Trade competitiveness. Yes, we'll use rear. When it comes to trade competitiveness, we'll use rear. Whether near can be used as a tool to assess about the trade competitiveness, generally no. Okay, generally no. So it comes to what? Rear. So it is used to measure what? Trade competitiveness. Okay, trade competitiveness. So when rear increases, okay, rear increases. So okay, when rear increases, what happens to trade competitiveness? Whether our product will become more competitive in the external world, or it will become less competitive.
More competitive.
Yes.
More competitive.
More competitive. See here, an increase in the real effective exchange rate indicates an improvement in trade competitiveness. Okay, so it means when rear increases. So again, see, just to go back to that video and see it once. Okay, because it's a confusing topic. Okay, it's a confusing topic. So when rear increases, okay, when rear increases, what happens? Our products in the international market, they will become cheaper. Okay, they will become cheaper. So hence an increase in the real effective exchange rate indicates an improvement in trade competitiveness. Okay, statement is true. If you go to the first one, an increase in the nominal effective exchange rate indicates the appreciation of rupee. Okay, now see here, indicates an appreciation of rupee. Increase in rear?
Indicates a loss in trade.
Okay, it indicates a loss in trade competitiveness, right? Correct. An increase in real effective exchange rate indicates an improvement in the trade nominal effective exchange rate indicates the appreciation of rupee. Real effective exchange rate indicates an improvement in trade competitiveness. So here second one, it indicates a what? You have discussed, but again it will cause confusion. Yes? Increases what?
Competitiveness. By more cheaper and import more expensive.
An increase in real effective exchange rate. See here, we shall take with the help of an example. The first one, an increase in nominal effective. What is exchange rate? For 85 rupees, you are buying $1. Okay, $1. Now, an increase in nominal effective exchange rate. It means rather than buying $1 for 85 rupees, okay, you are buying it for 100 rupees. Okay, you are buying it for 100 rupees. So, this is an increase in nominal effective exchange rate. So, now rupee has appreciated or depreciated? Depreciated, right? Rupee has depreciated. So, here they are speaking about appreciation. So, first one is wrong. Okay, so when you eliminate one, you are left with two choices, 2 and 3. Now, we'll come to the second statement. An increase in the real effective exchange rate. Okay, an increase in the real effective exchange rate indicates an improvement in the trade competitiveness. Okay, so means somewhere, see, when again if you consider this condition itself, again in rare also you just consider this itself. So 85 you are getting $1 and for 100 rupees you are getting again $1. Now what happens? Dollar has become costlier. Okay, dollar has become costlier. So whatever the Indian exports are there, okay, so whether there will be demand for Indian exports? Yes, there will be demand for Indian exports because Indian goods are cheaply available. For lesser number of dollars, we are able to purchase more number of Indian goods. So Indian exports will increase. Okay, so in Indian goods exports will increase. So that will indicate improvement in trade competitiveness. Okay, so Indian goods more and more there will be demand in the external market. Because with lesser number of dollars, they will be able to purchase more number of goods. So they will be able to make profit in their domestic market. So what they will do? They will import more things from India. Okay, import more things from India. So 2 is correct. Okay, next. Yes. First one wrong. Rupee. If near increases, rupee appreciates. Okay, then I'll just cross verify. Probably then I am getting confused. I'll just look into the content and again we shall have a discussion. Okay, so we have discussed, but again there is a small confusion. We'll just mark it. Okay, we'll discuss again. Okay, we'll discuss again. Near and rear. First one. Second one. I'll cross verify because when you came up with the response again, I got confused. So we'll look into it. Okay, whatever is there, we'll just look into it. This question we'll again discuss once again. Okay. If with reference to the Indian economy, consider the following statements. If the inflation is too high, Reserve Bank of India is likely to buy government securities. It will sell government securities. Why it will sell government securities? The money which is present in the bank and all, it will what extract. Okay, it will absorb. Now the less money will be left with the banks, so banks will be able to lend less. So indirectly it will help in controlling the inflation. So it will not be what buy, but rather it will be sell. So first one is wrong. So when you eliminate first one, you are left with what? Only one choice, 2 and 3. Now we shall verify. We'll understand whether 2 and 3 are correct or not. If the rupee is rapidly depreciating, RBI is likely to sell dollars in the market. Okay. So dollars, from where will RBI get dollars? From Forex Reserve. In Forex Reserve, RBI has stored dollars. So which are the components of Forex Reserves? So here you will revise all those things. So components of Forex Reserves. Which are they? Yes. First is, no, that is the first in the decreasing order of their weight or the size. Foreign currency assets. Next, gold. Reserve tranche position in IMF. Special drawing rights. Which are the currency basket as part of special drawing rights? Dollars. Yes. Euros. Renminbi. Japanese yen. British pound and Russian ruble. Indian rupee. No. Okay. So how many currencies are there? 5 currencies. So those things you will revise. Now when when rupee is rapidly depreciating, okay, depreciating, it means 80 rupees per dollar has become 60 rupees per dollar. Yes or no? No, it has increased. 80 rupees per dollar has become 100 rupees per dollar. So rupee is rapidly depreciating. At that time, why RBI will sell the dollars? To help whom? Indian exporters or Indian importers? No. So dollars you are supposed to pay to whom? When you import items, you have to pay them in dollars. So now when you go and start purchasing in the open market, dollar is very costly. Okay, in order to reduce that stress, RBI will sell the dollars in the domestic market so that Indian importers will not face the problem. So the RBI when it sells the dollars, who are going to purchase? Indian importers. So they'll take purchase dollars from the RBI, then the international market, they'll pay dollars and they'll get the goods. It will help the importers. Okay? Means the statement based understanding is important. Simply if we say statement, but what is that background that we have to understand? So it is going to benefit whom?
Indian importers.
Indian importers. Okay, importers. Okay, importers. So second one is true. If the interest rates in USA or European Union were to fall, that is likely to induce RBI to buy dollars. Why? Yes. Why the third statement is wrong? Correct. Why inflow will take place? What is the connection between repo? See, people will be interested to invest where the interest rate is high. Now, if there are two options, one is State Bank of India, another one is Corporation Bank. Okay, if a corporation bank what gives you 10% rate of interest, SBI 9%, where you will invest? What? 10% corporate bank, corporation bank. Now, a Japanese or any Russian investor, he has two choices. One is India, another one is USA. Okay, so here in the India, the rate of interest is 8. In the USA, the rate of interest is 10. Okay, where they will invest? USA. Now, in the USA, if they reduce the interest, now see, don't get confused. I say 8 and 10. In India, it is 8. In USA, it is 10. So, a Russian investor will go to USA. No, he will go to USA. The rate of interest is more in USA, right? So, as a Russian investor, he has two options, either to come to India or to go to USA. Now, he wants to invest. His invested money should earn more. So, where it can earn more? It can earn more in USA. Okay, USA. Now, after some years, so they will reduce the rate of interest. Now, see, don't frame complex questions. Sir, if they reduce it to 9, what happens? No, we'll assume that they are going to reduce it to 7%. The Indian rate of interest has remained same, 8%. Now, Russian investor, what he will do? He will take out the investment which he has made in USA, and where he will come? He will come to India because the rate of interest is high. Okay, because he will get good returns. Now, if the interest rates in the USA or European Union were to fall, when he comes to India, what he will do? A Russian investor, will he bring ruble to India? No, because ruble we are not going to accept. We say that we require dollars. Okay, we require dollars. So, what he will do? He will, somewhere in the international market, he will purchase dollars, and to invest in India, he will bring dollars. Okay, he will bring dollars. Now, we will say, now we are not that much interested in dollars, we are not ready for investment. Now, we will say, we are not going to provide you what? Okay, anyway, we will come up with the dollars. Now, the dollars are very easily flowing into India. It means previously if the dollars were available for 90 rupees, now the dollars are available for just 85 rupees. It means dollars will become cheap. When the dollars will become cheap? When there is a huge flow or lesser flow? Huge flow. So continuously huge flow of dollars is taking place in India. So as a result, there is a less demand for dollars. As there is a less demand for dollars, the price of the dollar will come down. The dollar will become cheap. When the dollar will become cheap, what the RBI will do? It will purchase, and where it will keep? Forex reserve. Okay, it will purchase and it will keep it in the forex reserves. So hence statement third is correct. Okay, statement third is correct. So now similarly, if you just change the statement, if the inflation is too high, Reserve Bank of India is likely to sell government securities. True or false?
No, sir.
True. Okay. In the third statement, if the interest rates in the USA or European Union were to fall, okay, that is likely to induce capital inflow in India. True or false? Capital inflow in India. If the interest rates in the USA or European Union were to fall, that is likely to induce capital outflow from India. False. If the interest rates in the USA or European Union were to rise, that is likely to induce capital inflows into India.
False.
That is likely to induce capital outflows from India. Okay. So one question, multiple perspectives. From this fashion, when you connect the things, okay, you will be able to answer such kind of questions very confidently in the examination hall. Okay. Examination hall. Yes. So see here, I'll change the statement. If the rupee is rapidly appreciating, okay, RBI is likely to buy dollars in the market. True or false?
False. At least I will say true.
True. Okay. Whether both of them are correct. If the interest rates in the USA or European Union were to fall, okay, rupee is likely to appreciate. True. Likely to depreciate. False. So see, the same question itself, it should help us to build that what background. Okay, repeatedly when you go through the question, when you think from multiple perspectives, then you will become perfect. Okay, you will become perfect from the exam point of view. Okay, from the exam point of view. So the last question we shall discuss, and after this we shall conclude. So with reference to the Indian economy, what are the advantages of inflation indexed bonds? Okay. So government can reduce the coupon rates on its borrowing by way of IIBs. IIBs provide protection to investors from uncertainty regarding inflation. The interest received as well as capital gains on IIBs are not taxable. Okay. First we shall see which one can be easily eliminated. Third one. Okay. So non-taxable, it is false. Everything is taxed in India. Okay. Even drugs which are required for saving life also, they are taxed in such a scenario. So these bonds being immune from taxation, definitely we can say that that statement is wrong. So third one is wrong. We have only one answer, 1 and 2. Now coming to the statement. So inflation indexed bonds. So government can reduce the coupon rates. So what is coupon rate? Interest rate, right? Interest rate. So normal bond and inflation indexed bond. So what is the difference? Normal bond and inflation indexed bond. Now let's assume normal bond, its rate is 1 lakh rupees. Okay, 1 lakh rupees, and the rate of interest is 10%. So after 1 year, a person will get how much return? 1 lakh plus extra 10,000 rupees. Okay, 1 lakh 10,000 rupees. Normal bond. In case of inflation indexed bond, 1 lakh and 10% is the rate of interest. So it depends upon inflation. Let's assume if the inflation in 1 year is 20%, how much you will get? Okay, it may be both in terms of principal as well as what? Generally it will be in terms of interest, not in terms of principal. So 1 lakh plus extra 10. So inflation on top of this 10%. So 20 means it is what extra 2,000 rupees. Okay, extra 2,000 rupees. So he'll get 12,000 rupees. Okay, he'll get 12,000 rupees. In the first case, he'll get fixed amount. Here, based on inflation, he may get more or he may get less. So it is inflation adjusted. Okay, inflation adjusted. Now, if you want inflation indexed bonds, okay, when you are negotiating, the opposite person, what he will see? Whether he'll pay higher rate of interest or lower rate of interest. So you will go, so two people A and B, if they are negotiating, okay, A and B are negotiating. So now A is the bond issuer, B is the bond purchaser. For bond purchaser, what kind of bonds you want? Inflation adjusted or without inflation adjusted? Adjusted, okay, because he wants protection against inflation. So in such a case, when he is negotiating, what A will say? I will give you inflation indexed bonds, okay, but the rate of interest will be more or less? Less. Okay, he'll negotiate and he'll say, okay, I'm ready to give you inflation indexed bonds, but the rate of interest will be less. So this person, then he has to say yes. Otherwise, he should go with the normal bonds. Okay, normal bonds. So that's why government can reduce the coupon rates. Will reduce what interest rate on borrowing by way of inflation indexed bonds. Okay, inflation indexed bonds. So first one is correct. IIBs provide protection to investors from uncertainty regarding inflation. Okay, so if there is a high inflation, accordingly you will get high returns. So it will offer you a protection against inflation. Okay, inflation. So again, this is a important topic. See, even if we are able to eliminate also the options, okay, how will they help us? Okay, so they are very important. Very important. So again, similar kind of questions you have asked on convertible bonds and non-convertible bonds. Next, inflation indexed bonds and non-inflation indexed bonds. So again, these are various concepts which are very important, very important. So we shall conclude here itself. Again, in the next class, we shall resume back with the discussion. Okay, with the discussion. So whatever we have covered. Okay, question paper, wherever space is there, you just write it. Otherwise, you can attach an extra sheet of paper rather than going through each and every line of the notes now. What I will urge is, if you are able to keep yourself on track with the everyday whatever we are going, the syllabus that we are covering, then that would be better. That would be more than sufficient for you to touch what? All the questions in prelims. How many questions you want to touch? Okay, here in economics, 60 to 70% of the questions, if you are able to touch, that is more than sufficient. Okay, more than sufficient. So with this, we shall conclude what today's class.
Purchase ಮಾಡೋಂಗೆ loss ಆಗಬೇಕು risk
There will be no risk because generally there will be no deflation. Generally there will be some amount of inflation. Okay, so loss chances are very rare. Okay, very rare.